Two of tech's biggest names are fighting for the very soul of Bitcoin. One sees it as digital gold, the ultimate safe haven in an age of endless money printing. The other sees it as the people's currency, a tool to free the world from the grip of big banks. Their visions couldn't be more different, and the future of the world's most important cryptocurrency hangs in the balance. This is the ultimate breakdown of their arguments, from Rothschild era gold to the Lightning Network, to decide, is Bitcoin an asset or is it a currency? The answer won't just define the future of money, but the very shape of power in the 21st century. And this isn't just some friendly disagreement, it's a fundamental philosophical war over the purpose of the most important invention since the internet. On one side, you have Michael Saylor, the high priest of Bitcoin as digital property, a man who has tied his billion-dollar company to the fate of this asset. On the other, you have Jack Dorsey, the quiet architect of the social web, who believes Bitcoin's destiny isn't to be held, but to be spent. Their conflict is really the story of two powerful competing ideas that have defined Bitcoin from the start. Is it a lifeboat, a perfect, incorruptible asset meant to protect your wealth from the storm of inflation? Or is it a set of wings, a technology meant to give economic freedom to every single person on the planet? To understand this war is to understand Bitcoin itself. It's a journey that takes us from the debasement of ancient Roman coins to the absolute cutting edge of financial tech. In this video, we're putting these two titans and their worldviews head to head. We'll break down their core arguments, explore the technologies they're betting on, and analyze what their visions truly mean. By the end, you'll understand the two possible futures for Bitcoin and be able to decide for yourself which path it should take. This is the story of Michael Saylor versus Jack Dorsey and the war for Bitcoin's soul. To get where Michael Saylor is coming from, you have to understand his conversion. Before 2020, Saylor was a successful tech CEO running his business intelligence firm, MicroStrategy. Bitcoin was barely a blip on his radar. But as the world plunged into economic chaos and central banks started printing money like never before, Saylor saw a crisis on the horizon. He famously described the cash on his company's balance sheet as a melting ice cube, its value evaporating with every new dollar created. He needed a lifeboat, a place to park his company's treasury that couldn't be inflated away. He looked at everything: stocks, real estate, gold, and then he found Bitcoin. For Saylor, it was a light bulb moment. He didn't just dip his toes in, he went all in, converting his company's cash reserves and even taking on debt to buy more. As of late 2025, MicroStrategy holds approximately 214,400 BTC. Depending on the price, that's a multi-billion-dollar bet, representing over 1% of all the Bitcoin that will ever exist. His conviction is absolute, and he's become the world's most passionate evangelist for Bitcoin as the ultimate asset. His argument stands on a few powerful ideas. First and foremost is Bitcoin as digital gold. Saylor argues that in a world where every government-issued currency is designed to lose value, you have to find a better way to store your economic energy. For centuries, that was gold's job. But Saylor argues that Bitcoin is superior in every way. Its supply is mathematically locked at 21 million coins, a hard cap that can never be changed. Unlike gold, where you can always mine more if the price goes up, Bitcoin's creation schedule is fixed and predictable. It is, in his words, pristine collateral, an asset with no CEO and no country behind it that can suddenly change the rules. He uses powerful analogies to make his case. He calls fiat currency that melting ice cube and Bitcoin a lifeboat in a currency tsunami. He frames it not as a gamble, but as the only logical savings account for anyone thinking 100 years into the future. While gold is heavy and hard to move or verify, Bitcoin is weightless. You can send $1 billion of it across the world in minutes, and anyone can verify the transaction. But he isn't just talking about a personal hedge. His second major point is that Bitcoin is an institutional grade reserve asset. Saylor's vision is top down. He believes the classic 60-40 portfolio of stocks and bonds is broken. He's pushing for a new model where Bitcoin becomes the main treasury asset for individuals, for corporations, and eventually for nations. He sees a future built on a Bitcoin standard, just like the world was once on a gold standard. In this world, Bitcoin is the bedrock of economic certainty. He has even described owning it as achieving economic immortality. He's relentlessly stuck to this strategy, consistently buying more during market dips, proving his company's belief in Bitcoin as a long-term holding. This, of course, leads to the biggest criticism of his idea, but you can't buy a coffee with it. Critics point to Bitcoin's price swings and slow transaction times as proof it can never be real money. But this is where Saylor's argument gets interesting. He counters with his third pillar. Bitcoin is a medium of exchange, just via derivatives. Saylor says the cup of coffee argument misses the point of how huge financial assets work. He draws a parallel to the Rothschild banking family in the 19th century. The Rothschilds built their empire on gold, but they weren't lugging gold bars across Europe for every deal. That would have been slow, expensive, and incredibly risky. Instead, they created derivatives, paper notes, and letters of credit that were backed by the gold. The fast, efficient paper did the traveling, while the gold sat securely in a vault, providing the trust. Saylor sees Bitcoin's role as exactly the same. The main Bitcoin blockchain, with its security and 10-minute settlement time, is the final layer. It's like the Fed wire system for central banks. It's not for small, everyday buys. The cup of coffee transactions, he says, will happen on other layers built on top of Bitcoin. These could be second-layer solutions like the Lightning Network, or financial products like ETFs and credit cards that are ultimately backed by Bitcoin. In this view, you'd still use your card to buy coffee, but the final settlement deep in the financial system's plumbing would happen in Bitcoin instead of dollars. To sum up the gospel of Saylor, Bitcoin's destiny isn't to be a better Venmo, its destiny is to be a better gold. It's digital property, the apex asset for our time. Its purpose is to be acquired and held, protecting wealth for generations. The revolution for Saylor isn't in how we pay, but in what we save. While Michael Saylor had a dramatic overnight conversion, Jack Dorsey's involvement has been a long, steady burn. As the co-founder of Twitter and CEO of the payments company Block, Dorsey was a believer from the early days, but his vision is almost the perfect opposite of Saylor's. Where Saylor sees an asset, Dorsey sees money. Where Saylor sees a vault, Dorsey sees a network. Dorsey's entire philosophy comes from the very first line of Satoshi Nakamoto's white paper: Bitcoin, a peer-to-peer electronic cash system. For Dorsey, that isn't just a title, it's the mission. He has consistently championed the idea that Bitcoin's ultimate purpose is to become the native currency of the internet, global, open, and free from censorship. His crusade comes from a deep belief that our current financial system is broken. It's slow, expensive, and leaves billions of people out. It's controlled by a handful of powerful banks that act as gatekeepers, taking a cut of everything and holding the power to shut anyone out. Dorsey's vision is about financial empowerment. He sees Bitcoin as a tool for the unbanked, a way for a small merchant in a developing country to accept payments from anywhere without needing a bank. For Dorsey, Bitcoin fails if it only becomes a digital treasure for the rich. Its success is measured by how useful it is for everyone else. This puts him in direct conflict with Saylor's worldview. Dorsey and his supporters see the digital gold idea as a dangerous distraction. They argue that an asset nobody ever spends has no real utility and therefore no real long-term value. An asset's ability to store value, they say, comes from its usefulness as a medium of exchange. If no one ever plans to use it for transactions, then its price is just a speculative bubble. But Dorsey isn't just talking, he's building. He sees the challenges and is using his company, Block, to solve them. The first and biggest hurdle is scalability. Critics are right. The main Bitcoin network can only handle a few transactions per second, making it useless for global commerce. Dorsey's answer is the Lightning Network. The Lightning Network is a layer 2 technology. The easiest way to think of it is like a bar tab. You don't swipe your card for every single drink. That would be slow and annoying. Instead, you open a tab, have lots of small transactions all night, and then settle it all with one single payment at the end. The Lightning Network is similar. Users open payment channels and can make almost unlimited, instant, nearly free transactions off-chain. Only the final balance is recorded on the main Bitcoin blockchain. This solves the speed problem. It allows Bitcoin to work like Visa, but without the central company in the middle. Dorsey's company has been a huge driver of Lightning, building it into its popular Cash App. The second challenge is usability. Let's be honest, using Bitcoin can be intimidating. Private keys and self-custody are scary concepts, and if you mess up, your money is gone forever. To fix this, Block developed BitKey, a hardware wallet designed to make holding your own Bitcoin simple and safe for a mainstream audience. The goal is to give people the power of self-custody without needing a degree in cryptography. The third hurdle is policy. In many countries, every time you spend Bitcoin, it's a taxable event. This creates an accounting nightmare and stops people from using it for small purchases. You don't calculate capital gains on a dollar when you buy a coffee, and Dorsey argues you shouldn't have to for Bitcoin either. He has been a vocal advocate for tax reform and is pushing to make transactions cheaper and easier, with the goal of creating a true peer-to-peer flow of money on his platforms. Dorsey's vision is a bottom-up revolution. It's not about getting big corporations to adopt Bitcoin. It's about getting individuals to use it. He's funding open-source Bitcoin development through his foundations, giving millions to support the programmers building this future. He's even pushed for integrating Bitcoin into private messaging apps like Signal, which could bring a private payment system to tens of millions of people overnight. To sum up the crusade of Dorsey, Bitcoin's destiny is to become peer to peer cash. Its value comes from its use as a global payment network. He's fighting to make Bitcoin a transactional currency for the people. For him, the war is won when a teenager in Lagos can pay a designer in Lisbon instantly for a fraction of a penny with no bank in the middle. The soul of Bitcoin, in his view, is freedom. So the visions of Michael Saylor and Jack Dorsey aren't just different, they pull Bitcoin in opposite directions. Their conflict plays out across a few key battlegrounds that will decide its future. The first and most obvious one is volatility. For Jack Dorsey, Bitcoin's wild price swings are a critical bug. It's tough for a merchant to price things in Bitcoin if its value could drop 10% in an hour. It's just as tough to take a salary in it if you don't know what it will be worth next week. This volatility is a huge roadblock to it being used as everyday money. Dorsey sees this as a problem that will get better with time, maturity, and tech solutions like using stablecoins over the Lightning Network to offer stable prices on Bitcoin's payment rails. Michael Saylor, on the other hand, famously calls Bitcoin's volatility a feature, not a bug. He calls it short-term volatility for long-term appreciation. He argues the price swings are just the natural behavior of a new asset that is in the process of absorbing value from the massive ocean of other assets like gold and real estate. To him, complaining about the volatility is like complaining about the violent shaking of a rocket ship on its way to the moon. It's just the price you pay for incredible performance. He simply tells people to zoom out and look at the long-term chart. The second battleground is scalability and the role of layers. Here, the disagreement is a little more subtle. Both Saylor and Dorsey agree that the main Bitcoin layer is slow and that other layers are needed, but they completely disagree on the purpose of those layers. For Saylor, the slowness of the base layer is actually one of its greatest strengths. It's slow because it's so secure and decentralized. He wants that base layer to stay as a final settlement layer for huge, important transactions, the digital equivalent of two central banks moving gold. He's a bit skeptical of layer 2 solutions, seeing them as secondary tools for financial institutions. For him, the security of the main asset is everything. For Dorsey, the base layer is just the foundation. The real action and adoption will happen on layer 2, specifically the Lightning Network. He believes the future of Bitcoin is Lightning. It's not some optional extra, it's essential. He's focused on pushing users and transactions onto this second layer to create a high-speed payment network for the world. Recent data shows this idea is catching on, with major exchanges like Coinbase integrating Lightning and transaction volumes growing. He's willing to accept the complexities of Layer 2 in the name of real-world utility. This leads to the third most philosophical battleground, the end goal. Saylor's end goal is a top-down adoption. He wants to convince the powerful corporations, institutions, the super rich to adopt Bitcoin as their main reserve asset. In his world, Bitcoin is held in large concentrated pools by the most powerful players, forming the bedrock of the financial system. It's a vision of Bitcoin as the ultimate tool for preserving wealth. Dorsey's end goal is the complete opposite, a bottom-up adoption. He's focused on the individual, especially the 1.7 billion people who don't have a bank account. He wants to see Bitcoin used on the streets of Buenos Aires and Lagos, not just on the balance sheets of Wall Street. His is a vision of Bitcoin as a transactional tool for economic liberation, spreading from person to person. These two goals are in direct conflict. A world where Bitcoin is mainly a reserve asset means few transactions and high fees on the base layer, reinforcing the digital gold idea. A world where Bitcoin is a daily currency means high velocity, millions of small payments, and a focus on low fees and ease of use. They are fighting for two different futures. The clash between Saylor and Dorsey feels like a binary choice, asset or currency. But what if that's the wrong way to look at it? What if it's not a war, but an evolution? This is where a third perspective, often explained by macro analyst Lynn Alden, becomes really useful. Her work suggests this isn't about two opposing destinies, but about two necessary stages in the life of any new money. This idea goes back to the economist Carl Menger, who figured out how money naturally evolves. It happens in stages. Something doesn't just appear and become money overnight. First, people have to want it for its own sake. They start holding it not to spend it, but because they believe it will hold its value and other people will want it in the future. In other words, it must first become a store of value. This is stage one. An asset becomes the most saleable thing around, the one that's easiest to trade because everyone trusts its value. This is exactly the world Michael Saylor is trying to build. He's making the case for Bitcoin as the ultimate store of value for the digital age, pushing everyone to add it to their balance sheet. His obsession with security and long term holding is a perfect example of stage one. Only after an asset is widely trusted as a store of value can it move to stage two, a medium of exchange. Once everyone is confident it will hold its value, they become willing to accept it as payment. They stop thinking, I'll accept this so I can sell it for the real money I want, and start thinking, this is the real money I want. And this is the world Jack Dorsey is fighting for. He's trying to push Bitcoin into stage two. His focus on the Lightning Network, usability, and friendly policies is all about making Bitcoin practical for daily use. He sees the store of value property not as the end goal, but as the necessary stepping stone to get there. From this angle, Saylor and Dorsey aren't enemies. They're just builders working on different floors of the same building. Saylor is pouring the concrete foundation, making it as strong as possible. Dorsey is already trying to build the upper floors, putting up the walls and plumbing that will make the building useful for billions of people. The tension exists because they're on different timelines. Saylor thinks the foundation needs to be way bigger and more solid before we can worry about anything else. Dorsey thinks the foundation is strong enough, and if we don't start building on it now, the whole project will fail and just become a digital bunker for the rich. Lynn Alden's work points to history to back this up. Gold was a collectible and a store of value for thousands of years before it became the bedrock of global finance. She argues that as governments take on more debt, the world will naturally be drawn to a scarce asset like Bitcoin, first as a safe haven, Saylor's vision, and then, as the tech matures, as a payment network, Dorsey's vision. This third way reframes the whole debate. It suggests both sides are right and both are necessary. The market even seems to be proving both right at the same time. The launch of Bitcoin ETFs in 2024 brought in billions from institutions, a huge win for Saylor's digital gold narrative. At the same time, the Lightning Network is seeing explosive growth in real-world use, proving Dorsey's internet money vision is more than just a dream. So maybe the war for Bitcoin's soul isn't a war with a single winner. Maybe its soul is meant to be dual. It needs the institutional buy-in that Saylor's vision brings, and it needs the grassroots utility that Dorsey's vision promises. The future may not be Saylor versus Dorsey, but Saylor then Dorsey. So we're left with two powerful, competing, and maybe complementary visions for Bitcoin. On one side, Michael Saylor, the titan of industry, sees Bitcoin as the final safe harbor in a world of monetary storms. His is a vision of strength, of preservation, of Bitcoin as an immovable digital fortress, a top-down revolution. On the other side, Jack Dorsey, the architect of networks, sees Bitcoin as a liberating force for the individual. His is a vision of motion, of connection, of Bitcoin as a flood of peer-to-peer payments empowering everyone it touches. A bottom-up revolution, a fortress or a network, a store of value or a medium of exchange, a tool for the rich to stay rich or a tool for everyone else to gain freedom. This isn't just a technical debate, it's a philosophical question about what we want our money to be. The truth is, Bitcoin's future isn't written yet. Its code is set, but its destiny is being forged right now by the Saylors who choose to save and the Dorseys who choose to build. The outcome will shape our global economy for decades. It's a quiet war fought in lines of code, on balance sheets, and in the minds of its users, and it's far from over. So, who do you think is right? Are you on Team Saylor, betting on digital gold, or are you on Team Dorsey, fighting for a new people's currency? Let us know in the comments below. And if you want more deep dives into the future of technology and finance, make sure to subscribe and hit that notification bell so you don't miss what's next.